So today's focus over here is going to be on understanding the market mechanics, which is to give you a better understanding of what moves the market, what are some of the factors that you want to consider and you need to take note whenever you're trading the currency market. Today's objective is to understand the building blocks of fundamental analysis, right? As I mentioned, what moves the market from a underlying factor, what are some of the things you need to take note of from a longer time frame perspective, from a bigger picture perspective, giving you that conviction and that confidence whenever you approach the market. With that, you will start to appreciate some of the catalysts that can move the market, right? Sometimes you realize, hey, how come the market moved suddenly so strong? How come it moved in a particular direction? So from the fundamental point of view, you'll be able to have a better understanding and better grasp in terms of this, right? So you'll not be surprised. And of course, every time you trade, okay, you would have that confidence and you know what you're doing. Okay, so this also helps you to build up the bigger picture direction. Okay, so for some of you, perhaps you're more towards what we call a swing trader or even long-term investor. Okay, so the fundamental picture comes in and play a very important role if you're either a swing trader or even a long-term investor. Okay, because it can actually help you to maximize your profit potential. Okay, so you don't cut yourself short from potential profits. You have the confidence to kind of hold on to a profitable trade and ride it as long as the market allows you to do that. Okay, so this is the broader picture of like what we're going to cover today. Right, so very quickly, quick introduction about myself as well. My name is Kai Yong. I started my trading journey back in 2012. So to date, it's just over 10 years. I always share with fellow traders and investors that even I have 10 years in the market, I have 10 years experience in the market. I'm always constantly still learning from the market. The course is ever changing, it's always evolving. Okay, and as a trader and investor, you definitely need to keep learning, okay, and fine-tune your craft as well in terms of the market. In my journey, I've tried out many different methods, especially in terms of like technical analysis. If you're fairly new, you probably be overwhelmed with all the different indicators and sort of, I've been through that as well. And I'd like to just very quickly share with you that, there's no such thing as the holy grail, or there's no such thing as like, well, the best indicator or the best strategy. Because every indicator and every strategy would have its strength and weaknesses at the same time. Okay, and what you really need to do as a trader is to understand the approach, okay, and find a method that kind of fits you, right? Fits your personality, right? So that's something that you want to have in mind as you're exploring various strategies and perhaps technical indicators in your journey too. One of the biggest lessons I've learned in trading, okay, it's about risk management. And I learned it through an account that I lost 20,000. And over here, just want to highlight again, right? No matter what strategy, what method you use, risk management is like the most important aspect in trading. Okay, even today, right? After we talk about like the fundamental aspect, you have that confidence, you have that conviction to take a trade in the direction. You still want to always manage your risk, okay? Because the market, as I mentioned, is erratic. It can move and U-turn immediately, and then you don't want to get caught in a big loss, right? So always manage your risk. I managed to turn full-time trading investing in 2015. Since then to today, on top of just trading and investing on my own accounts, I've also been really enjoying myself, sharing what I've learned, my experience with fellow traders like yourself today. And I do hope that through my journey, through my experiences, you'll be able to shorten your learning curve. And hopefully we'll be able to give you some ideas and insights to help you progress in your trading journey too. So that's a little bit about me. These are just some photos of some of the events that I had. So with that, let's get started for today's session. Yeah, let's start off by first understanding the macro fundamentals. Often, one of the things that people kind of shut themselves off immediately when we talk about fundamentals is that, they have this perception that if today you did not study economics, then you have no idea how this is going to work, or it's going to be very difficult. I just want to give you the assurance that it's not the case. In fact, once you understand it, it's not that complicated, right? It's pretty simple, and think of it as a very logical sense of how the market functions. Macro and fundamental over here, there are essentially three things that you just need to know. The first, of course, is central banks. And I think you know, right? Every country would have a central bank. No matter where you're based, if you're in Philippines, you have the Philippines central banks. If you're based in Malaysia, you have the Malaysia central bank. If you're based in Singapore, you also have a Singapore central bank. But of course, we don't actively trade all these currencies, right? In fact, we trade the major currencies like the US dollar, the Japanese yen, the euro, the pound, etc. Okay, so each country itself would have a central bank. We need to understand, the function, the roles of the central bank. What do they do? What are some of the things that they can utilize to kind of control the economy? Okay, so we'll talk a little bit more into the details of it, but over here from a big picture perspective, fundamentals, the first thing you need to understand and you need to know is central banks. Then the next thing, of course, is economic indicators. I think this is not new. If today you have been trading a little bit in terms of the FX market, you've probably heard of this, very, very popular term called NFP, right? Or non-farm payroll. It's actually one of the economic indicators. Okay, but of course, there are more than that, right? And what are these economic indicators? They're basically tracking how well the economy is doing, right? And that gives some information to the central bank as to what the current economic performance is, what the banks then need to do in response to that. And from here on, of course, there will be an effect in the market prices. Okay, and then for us as traders, that's where we want to make sense of it. So essentially, fundamental, if you take a look from a big picture perspective, these are the three components. You need to understand what the central bank does. You need to then look into the current economic indicators to give you an idea how the current economic performance is right now. And then you make sense of it, right? So based on this current condition, what the banks would do, and from there on, how would it have an impact on the currency price, right? And then from there, you trade it accordingly. First off, let's go into a little bit into the central banks, right? If you're not familiar with it, there are 8 major banks because there are 8 major currencies that we are often trading. So the first one is the US dollar, okay? And of course, that would be the Fed, or some of us just call it the Federal Reserve, okay? And then of course, you have the Japanese yen, which the central bank of it is Bank of Japan. Following that, you have Bank of England, right? Or some of us will just call it BOE, okay, short form. Then you have the ECB, which stands for European Central Bank, okay? Then we have the SNB, Swiss National Bank, Reserve Bank of New Zealand, Reserve Bank of Australia, and of course, Bank of Canada. You need to be familiar with the short terms as well, right? Like ECB is for European Central Bank, RBNZ is New Zealand, RBA is Bank of Australia, and then of course, BOC is Bank of Canada, right? So just be familiar with the names of these banks. So from there on, you need to then now know what are the roles of the central banks, right? Why do they exist? What are the functions of the central bank? So over here, the keyword is mandate, right? So that's the kind of like the proper terminology to put it, okay? But mandate over here, you can also understand it, as I mentioned, the roles, the functions of the bank. So the first thing here is, of course, about price stability and inflation, right? So that's the first target. If you look at what we have experienced for the entire of 2022, this comes in very handy. Okay, so if you're first time really coming across like fundamentals, finally you probably get the aha moment. Okay, like, oh, that's why this is happening in 2022. But you realize that this year itself, a lot of conversation kind of revolves around inflation, right? Of various things that's happening, pushing prices up, right? So you have like the lockdown in 2020 and 2021. Okay, lockdown, so a lot of supply chain is being disrupted, supply is being affected, right? And that can push prices up because there's a limited supply and then the demand is high, prices of goods and services goes up, right? That can push inflation. Okay, prices goes up. And then of course, just recently we also have some conflict between Russia and Ukraine, so that kind of disrupted some of the energy production as well. So it pushes price up too. That's why in 2022, we kind of experience a very high inflation environment. So one of the roles that the central bank needs to do is to help maintain a healthy inflation target, right? Because if inflation is too high, everyone is not going to benefit, right? Everyone will feel the pain. Therefore, the central banks needs to find ways to bring inflation down. However, on the other hand, if inflation is too low, it's not good, right? Because it means that things are not moving, the economy is not growing. So you need a healthy inflation target. Okay, so for those of you who are not aware, you might want to write this down. Most developed countries' inflation target is somewhere between 2% to 3% year on year. So if you look at where the US is right now, they're experiencing kind of like 7+% of inflation. So that is very high. The bank needs to bring it down back towards somewhere around 2 to 3%, right? So that's the objective that you need to achieve. Now, the other thing that central bank needs to work towards is to have a healthy employment target, which means that people would have jobs to work in. And if, let's say, the unemployment rate is very high, they need to find ways to bring down the unemployment rate, right? They need to find ways to create jobs within the economy. So these are generally the two targets that central banks have, right? So either of this is off target, they need to find ways to bring it back, okay? And in a while, we'll discuss like what are some of the methods, what are some of the tools that these banks can use to bring all this back to its target. So all the best to your trading for the remaining of this week and next week. And I'll see you guys on the 19th of December. Okay, so see you guys. Bye-bye.